Hey everyone, I get asked a lot what my day looks like. I get what my day looks like, how reliable are the indicators, how often do they work, how often are they right, how often are they wrong, and basically what do you do all day. So I wanted to walk you through and make a little compilation video answering all your questions about the charts, what I do all day, and how frequently these indicators work. So I want to walk you through 2 real trades that I made, didn't make, and made today. So this one here opens at around 390 and immediately drops to 382. Lots of volume right at the open, lots of selling. And we're close, but not exactly at oversold territory. So I'm waiting for 2 things. I'm waiting for the stock to level off, in other words, stop selling, and I'm waiting to hit this oversold territory. So once it hits oversold, it will kind of start to level off, and hopefully at that point I buy and I ride the rally, I ride the recovery, right? It's like a bounce play. It drops, you swoop in, you buy a little, it pops a little bit, you sell. This stock I've studied for a while typically has trading ranges over the course of several days of around 20 to 30 to even, if you're lucky, 40 cents. My goal is to make $200 or more on a trade. Generally, though, I like to stay around $2. So what I was expecting was the stock would drop to around 370 before it started to turn around. At that point, I would buy. Then I'm aiming for around a 20 to 30 cent spike in price, at which point I would make my $200 to $300, get out, call it a day, and be happy. But this stock never quite got to oversold territory, and a surge of volume came in, and the price went up exactly what my target goal price was, right? If I had purchased it around 320, 382, and it shot all the way up here to 398 or 398 or 399, I would have bought and sold and made my money for the day and been happy. So the question is, how often are these indicators correct? Well, in this case, it didn't work for me. I didn't buy it down here because I was expecting it to go lower. And then the other question is, how often are the trading ranges that you study, how often are they accurate? If I said this stock generally goes up 20 to 30 cents in a day or 2 or 3, well, you can see here today it has gone up. Well, you can't see because I'm gonna blur out the stock name because I don't want you guys buying what I buy because it's volatile. I'm not a licensed broker, and I don't want you copying my trades. That's how people get hurt. It's not how people learn. I'm trying to teach you and show you some examples, and you got to be honest and show people how they don't work sometimes. This is an example of 2 things not working in my favor. 1, RSI in the chart, it never got to where I needed, but it still shot up. 2, the trading range of about 20 cents that I had predicted. Clearly, you can see here, it gets to where I would have sold. I would have sold at this point anyway. And look at the rally that I missed. Now the follow-up question is, well, why didn't you buy it here? Well, my indication was this is a stock that goes up around 20 to 30 cents. It already did it. It already had its rally for the day. So as far as I was concerned, I didn't think the stock was going to be going anywhere. Lo and behold, it breaks out here, and I saw the breakout, and I said, I missed my chance. I'm not chasing, because the last thing I want to do is buy at 4 and then have it drop down to 370. But then look at this. Keeps breaking out. Next question is, when do I sell? Well, in fantasy world, you'd be saying, well, obviously I'd sell here at 446, but you don't know how high it's going to go. You don't know when it's going to get to that price. When you sell is what your goal is. If your goal is for it to go up 20 cents, you would have bought it at 4 and you would have sold it at 424 or thereabouts, and you would have made your 230, 40 bucks and called it a day. And you would have watched it continue to go up, but at that point, you're not chasing, because chasing is how you get hurt. Right? That eats into your loss, right? What if you had purchased it at 446 and then sold at 440? You would have lost $200 or thereabouts, and that would have eaten into your gain. So it's important to not do that. So that's the stock that I missed out on. Now let me show you the stock that I bought and why I bought it. Ouch. Same thing in the morning. Same big drop, and it tanks all the way down to here. At this point, the chart is saying this is where you should be buying it. It's oversold. It's going to rebound. And just like the previous chart, it tanks, and then it has a little, 310 to 330, 20 cent bounce. Just like I was expecting, just like I was hoping for. So if both of these trades had worked for me, and I had gotten in and out with a 20 cent gain on both stocks, I would have made $400 on the day. Instead, The indicator on the first chart was telling me you probably shouldn't buy it. The indicator on this chart, however, was saying you should buy it. I bought it. It bounced, and then it just traded flat. Now you know that this is going to happen because of one thing: volatility. These Bollinger Bands trace the stock's volatility. The more volatile the stock, the further apart the bands are, right? So right here, there's tons of volatility. So look at how far the bands are apart. Now, what you would expect is after a steep sell-off like this, it's not going to, this V-shaped recovery that people talk about, it happens sometimes, but it doesn't happen all the time. What usually happens is it tanks, it trades flat for a while, and then everyone's watching. Everyone's watching and waiting. What's going to happen? It's trading flat. The bands are narrowing. If there's more volume and more buying coming in, that's when I'll buy. It'll break out to the upside like it does right here. You can see it crosses over that red line, and that's the buy signal. That's when you get one of these little arrows. Problem is, there wasn't enough volume to maintain that breakout. In fact, it didn't even put a breakout arrow on here because there wasn't enough volume to push the stock higher. So, two examples of the charts not working for me in both ways. The stock that I bought is a loser. The stock that I didn't buy is a humongous winner. And, you know, that's just how it goes sometimes. So the question is, what do you do all day? Well, today I'm just sitting here. It's boring. That's why I'm filming this video. It's 3:52 on a Monday. I'm not making any other trades today. Am I going to buy? Am I going to go back here now and I'm going to buy this at this level? No way, man. What I'm going to do is I'm going to wait for it to sell off, which may take a while. It might be a day or two or even 3. This stock could, for all I know, could go up another 50 cents tomorrow. For my sake, hopefully it doesn't. Hopefully it pulls back so I can re-enter, buy it, and you know, get my 20 cents. So I just wanted to illustrate to the guys out there who are asking, this is what it's like a day in the life of a trader. Sometimes these indicators are great tools. Sometimes they confirm your theory. They confirm a rally. They confirm a breakout. Other times, you know, there's no indication at all to work off of, and it just goes crazy. So there you have it. 2 examples. Someone asked, are these indicators useful? Do you find them useful? Most of the time in my experience, I have found them to be very useful. Today, they were not. It's only fair to show both sides of the trading life. Today is a wipe or a wash. It sucks. And I'm just going to sit here. I'm probably going to go play The Last of Us Part 2 and just call it a day. So if you found this video helpful, if this was illuminating in any way, showing you the life and times of a stock trader, please give it a like, subscribe, and follow. And thanks for